How's it going, everybody? Welcome back to the channel. Welcome to the channel. What is up? Is everyone good? Good? Okay, well then we're good. Let's get into it. So, it's that magical time of year that only comes 4 times a year, and that is that time when Apple reports earnings. And today just happens to be one of those magical days, which is why I'm here standing in front of a camera and talking to it. Because I want to talk about Apple's earnings. How were they? How is the stock doing? All that jazz. Alright, so before I get into that, always remember to hit that like button, hit the subscribe button, and turn on that bell notification to always stay notified on the latest and greatest videos that I post, like this one, for example. Anyways, enough of all the self-promotion. Let's get into Apple stock and their earnings. I'm going to read a report. We're going to go over it, the same spiel, all that stuff, and I'm going to give you my take on my largest and favorite company, Apple. So let's read this report. So it says Apple shares jump 5% as its Q2 numbers beat the street. So here are some key notes. Apple CEO Tim Cook said company officials feel a lot better about the company's position in China after its second quarter. Apple reported fiscal second quarter results Tuesday that beat Wall Street's forecast. Although its sales and earnings were below those it posted in its second quarter last year, they were better than analysts were expecting. The company shares were up 6% in after-hours trading following its reports. Investors cheered Tuesday after Apple's latest quarterly results surpassed the low bar Wall Street had set. The tech giant's fiscal second quarter revenue, including that from its all-important iPhone line, fell from the same period a year earlier, as did its earnings. But the results topped analysts' muted expectations. The company also forecasted that its third quarter sales would be higher than Wall Street was predicting. The company's better-than-expected report immediately resulted in a booming stock price. In recent after-hours trading, Apple stock was up $9.09 or 5% to $209.76. Earlier in the session, the company's shares were up as much as 6%. Here's what Apple reported and how its results compared with Wall Street's expectations and its year prior numbers. So fiscal second quarter revenue, $58 billion. Analysts had projected $57.5 billion, so that's a $500 million beat. In the same period last year, Apple posted revenue of $61.1 billion. So that's not good. They're $3.1 billion off of last year. Q2 iPhone sales, $31.1 billion. Wall Street was looking for $30.5 billion. So again, Apple is about $600 million above. The company recorded $37.6 billion in iPhone sales in 2018's second quarter. So if we look off of that number, that's obviously a $6.5 billion difference. That's a huge, huge difference. Q2 service sales, $11.5 billion. Analysts had forecasted $11.2 billion, so they beat by $300 million. Apple services business brought in $9.9 billion in revenue in the same period a year ago. So that's $1.6 billion more. So that's obviously a huge increase. That's good to see. Q2 earnings per share, EPS, $2.46. Wall Street was looking for $2.37. The iPhone maker earned $2.73 a share in its second quarter last year. Now, this one's mainly due to the stock buyback. They have been buying a lot of their stock, so that helps their EPS. Fiscal third quarter revenue, $52.5 billion to $54.5 billion. So this is what they're expecting. Wall Street had previously predicted $52.2 billion in sales. Apple saw sales of $53.3 billion in the same period of 2018. So obviously this is much higher, where analysts are expecting $52.2 billion, and Apple on the low end is $52.5, which is $300 million above their expectations. And their expectations are pretty much in line to either be slightly below or past their last year goal of $53.3 billion. So if they get more than $53.3 billion, they'll actually beat the 2018 period. Now it says Q3 EPS. The company didn't offer specific earning guidance, but its outlook for the period implies that it expects to post earnings ranging from $1.93 to $2.18 a share. Analysts had previously forecasted $2.08 a share. The company posted a per share profit of $2.34 in the last year's third quarter. So obviously, if they were to post somewhere in the $1.93 to $2.18, that would be a huge beat and a lot better than last year. So then moving on, it says Apple offered a mixed story on services. Wall Street reset its projections for Apple after it warned in January that saw worse than expected iPhone sales over the holidays and expecting continued struggles in coming months. The warning followed numerous reports and indications that its latest models weren't catching on with consumers to the same extent that previous models had. With Apple unlikely to refresh its lineup until this fall, analysts are projecting its sales won't rebound anytime soon. Even if analysts and investors had largely written off this overall report already, many have been anticipating the results of Apple's services business. As its iPhone sales have slowed, the company has increasingly been touting the growth of that segment, which includes everything from its Apple Music subscription service to its iCloud storage business to the money it gets from Google for promoting Google's search engine. Last month, Apple unveiled new subscription-based services for news, games, and videos, although only the news services has launched so far. The company offered a somewhat mixed bag on the services front for the second quarter. Sales top analyst estimates and Apple recorded record revenue in several service categories. CEO Tim Cook said on a conference call with analysts, but overall service revenue grew 16% from the same period a year earlier, which represented a slowdown from the 19% annual pace Apple recorded in the first quarter. What's more, the $1.6 billion increases in services revenue made up for less than a quarter of Apple's $6.5 billion decline in Apple sales. China continues to weigh Apple down. In addition to the drop in its smartphone revenue, Apple's second quarter results were weighed down by its continued struggles in China. It posted sales of $10.2 billion in its Greater China region, which includes Taiwan and Hong Kong. The amount was down 22% from the same period a year earlier. But that decline actually represented a relative improvement from the holiday quarter, when Apple sales in China slumped by 27% on an annual basis. The company has benefited from cutting its prices there, offering better deals to customers who are trading in old iPhones for new ones, and from a government stimulus program, Cook said. In terms of Apple's iPhone sales slump in China, the holiday period appears to be the drought. Cook said, he continued, "We certainly feel a lot better than we did 90 days ago. The new AirPods are a hit." The company's results were mixed when divvying up among its various product lines. In addition to the 17% year-over-year drop in its iPhone sales, Apple also saw a 5% decline in revenue from its Mac computers. Cook blamed that fall off in a shortage of processor chips. "We believe Mac revenue would have been up without those constraints," he said on the call. On the positive side, sales of Apple's wearables, home, and accessory products jumped 30% from the same period last year. That's obviously a huge jump. Revenue in the category was boosted by a nearly 50% jump in sales of its wearables devices, which are basically comprised of Apple Watch and the AirPods headphones. Cook said consumer interest in Apple's new AirPods, which it introduced last month, is off the charts, he said. "We're working to catch up with incredible demand," he said. Apple also increased their dividend, so it says the new quarterly dividend amounts to 77 cents as payable on May 16th to shareholders of record as of close of business on May 13th. At $3.08 annually, this new dividend gives Apple stock dividend a yield of 1.5%. Looking at Apple stock, so taking all that into account, what do I think about Apple? Well, it's my largest position, so obviously I like it. I only added a little smidge to this position when it fell. I was hoping to add more. However, it rebounded really quickly and I didn't really get a chance to, and I was hoping for it to go lower, and unfortunately I waited too long, and that's my mistake. Okay, I did add at the 170s. I added a little bit more shares. I was going to add in the 140s. I never did. I was hoping for it to go under 140. I had a buy order under the 140s that never got activated. So unfortunately that sucked, but it is what it is. I should have bought a little bit more. It's easier to look back and say you should have bought more, obviously. But hey, if you're going to give me slack on that one, I have a question for you. Why didn't everyone else buy Apple? Let's just take a second here. Think back a few months ago. December, January, when Tim Cook comes on the air and says, things aren't looking so good, all this other stuff, it's seeming like the end of Apple. People are cutting price targets left, right, and center on Apple. It's this, it's that, it's Armageddon. It's so annoying, to be honest, because these analysts, that's all they do. They just start cutting price targets. Oh, so smidge of bad news. Cut. Jesus Christ, man. Like, do you have anything intact? Like your price literally changes on the drop of a dime. Everyone was so worried about this stock. Apple's done and they're not going to grow anymore. They're declining. Huawei's got them beat. Samsung's got them beat. Forget about Apple, blah, blah, blah. Now it's like those are a distant thought. Like, that's not your first thought. Like, China was such a big issue. Qualcomm, all this other stuff. And now it's like everything's fine again. So it's really weird how the stock market works for certain things like this. I personally like Apple because their financials are amazing. I mean, you can talk whatever smack you want that they're not growing iPhones. And yes, they are having issues with that. I'll be the first to say it. They're not perfect when it comes to their iPhone growth. They're slowing. Flat out, they are slowing. But the revenue that they're getting from their iPhone is slowly declining as well. This was like 80+% of their profits. Now it's at like 60% of their profits. And mark my words, in about a year, it'll probably be 50%. And mark my words again, in a few more years, it's going to be like 35%. This is something that's just, it's natural in business. Like, think about it like this. HP probably made most of their money back in the day off of printers. Now they don't. That's just how business works. Things change. Back in the day, companies used to make a lot of money off of pagers. Now no one makes money off of pagers. That's just how business works, all right? The iPhone is still an integral part of their business, all right? But it's not the only part of their business. They have many different functions to their business. I think a lot of people get caught up on this, and this is what can create a buying opportunity in Apple's, because everyone goes, oh, the iPhone sales are down, this, that. I don't care, personally. Not everyone can afford an iPhone. Straight up. Not everyone can afford a phone. Not everyone can afford a MacBook. But the people who can tend to buy it. They have one of the highest customer service ratings. Okay, so like their products are amazing. Apple Music is one of the fastest growing services out there. I mean, Apple passed Spotify in paid subscribers in the US, all right? And I mean, Spotify recently passed 100 million, but don't worry, Apple is hot on their tail and Apple will eventually pass them one day. Probably not for at least a year or two, but mark my words, that day is also coming. Not to mention all their other services they're going to do. Now, I don't think their streaming service is going to be super big or anything like that. They're not going to be the king of streaming when it comes to this new thing. Again, if you want people to look out for that, Netflix obviously holds the crown right now, but Disney will be hot on their tails coming for them. And then Apple might fall in the third, fourth spot, somewhere around there, but they're not going to take the first or second spot. I know that for a fact. I don't think that's their main goal, and I don't really want it to be their main goal, to be honest. The streaming service is not really a business for them, okay? They're going to spend a lot of money to try and get there. I think they should just have it as a little bonus. If a few million people subscribe, great. If you're making some money off of it, great. But I wouldn't put all my eggs into that basket. In general, they have a lot of good things going for them. I've held this stock for the past 5 years, and I've been very happy with it so far. Now, I've seen them report like 15 quarters or whatever it is now. And I've seen a lot from Apple. I've seen people, love the stock, hate the stock, all this stuff. At the end of the day, I'm holding this position for a long time because I feel comfortable in this position and it's paying me, and they're upping their dividends, and I personally believe they will continue to up their dividends in the future. They have about a $225 billion balance sheet right now. Like, the companies they could buy in cash is kind of ridiculous. They could buy Netflix in cash if they wanted to. They could buy Tesla in cash if they wanted to. I mean, if Disney stock didn't run up as much as it did, Disney's now close to about $250 billion valuation, but they could almost buy Disney in cash. That's just crazy to think about. I like this company, but let me talk about why this company is either right for you or wrong for you. Okay? Now, the reason I picked this company personally is because I felt that it was one of the safer stocks out there. And I wanted one of my larger positions to not necessarily be like the safest stock, but to be a fairly safe-ish stock. And I believed Apple was a fairly safe-ish stock. Although at the time I bought it, that was not what people were saying. Back when I bought it, you know, Steve Jobs had died a few years ago, and the biggest issue back then was what comes after the iPhone. It's starting to slow down and all this other stuff, and people were very worried. Not me personally, because I didn't care about that. I had a very long-term vision on Apple. So the reason this stock is either right or wrong for you, the reason it's right for you is you like their balance sheet, you believe in the company, and you don't care about these iPhone sales as much, all right? As everyone always cares about these iPhone sales. Now, if you just believe that they're going to continue to grow and people will continue to use their products, then it's probably a good stock for you. Now, let's take the other side of this. If you want to put your money into, say, a more riskier stock or a more speculative stock, you can do that. That's totally fine. It's your money. I'm not going to tell you what to do with it. You know, $1 trillion company. Are they really going to hit 2 trillion so quickly? No. Straight up. They're not going to hit 2 trillion tomorrow or next week or next month. And for them to hit $1 trillion, their stock price would have to hit $416. It's going to take them a few years to get there. So I could see that, you know, your money will be tied up for a while. Yes, you'll get a dividends and all this other stuff. Now, I'm not saying put all your eggs into one basket. I don't have all my eggs in one basket. That would be a stupid decision. Anyways, always do your own research on stocks and pick which one you feel is best. Apple has just been the right choice for me for the past 5 years and probably will continue to be my choice for the next few years. I've bought Apple off of major weakness every single time, and I've never ever been disappointed by it. If I had to give you advice on Apple, I guarantee you there will be a next time to buy. This stock does not shoot up. No stock shoots up straight like this. I've never seen a graph that just looks like this. Please, I've yet to see one. Show me a graph. If a company that's been out for like over a year, you can show me a graph that starts here and just goes straight up like this. I'd love to see it, really, I would. The only thing that goes up like that is maybe a SpaceX rocket, but not Tesla. Youch. Anyways, hopefully you enjoyed this video. If you did enjoy this video, then I hope to see you next time. And remember to always have an amazing, beautiful, life-changing, one-of-a-kind day, and I'll see you next time.